Today we're going to talk about reverse mortgages versus selling your home and what's actually smarter. Let's have a real conversation here. You're sitting in your home, the one you've worked your whole life to pay for. You've raised your family there, celebrated holidays, maybe even weathered a few storms, and now you're thinking about retirement. Or you're already there and you're wondering, should I sell? Is this house more of a burden than a benefit now? Would it be good to pull some money out of this house and lock in my equity? And look, these are all totally normal questions. You're not alone. People all the time are asking these exact same questions. They're in the same situation. Millions of Canadians are retiring in the next few years. You might be cash poor, but house rich. You might be still carrying a small mortgage. Maybe you have no mortgage at all, but the bills are creeping up. Groceries are up, property taxes up, CPP up, OAS not up. So the idea of selling your home can sound logical. Simply simplify things, right? But before you do anything, let's walk through something most Canadians haven't been told about, the truth about reverse mortgages, and more importantly, whether it might actually be a smarter move than selling your home. First things first, my name's Peter Fabry. I'm a mortgage broker since 1999 and the founder of Rewind Mortgage, a reverse mortgage information site, which is a division of my licensed brokerage. You can find all of the licensing numbers for each province in the details section of the main page. This channel is all about honest, pressure-free education. And if that sounds good for you, then please hit the subscribe button and let's get started. The main thing here is to figure out what's smart for you to make your life easier. Not the bank, not your realtor, not your financial planner, not your family, you. So let's start with what it actually looks like to sell your home. Let's say your home's worth $750,000. Maybe it's mortgage free, maybe you've got a little left owing. Either way, you've got lots of equity. You talk to a realtor and they say, sure, we can get this sold. Let's move you into something smaller. Sounds simple, right? But there are a lot of things that don't get talked about. People don't pull out their pen and paper and write down all the costs and look at how much is it going to cost to sell, how much is it going to cost to buy, how much is it going to cost to stay? So first things first, you're selling your house isn't free. You're looking at up to 5% in realtor fees. So right off the top, that's $37,500 gone. Add in legal fees to sell, legal fees to buy, moving costs, maybe some updates or staging to your existing home so you get top dollar, easily another $5,000, $10,000. Then what? You've got to live somewhere. So where are you thinking of moving? A condo? Well, right now, there's thousands of condos that aren't selling. The prices have been free falling for a year. Everybody's probably heard at this point about the condo crisis in Toronto, in Vancouver, and other large metropolitan areas, and there really doesn't seem to be any end in sight. On top of that, you've got condo fees, parking fees, property taxes, and the one big thing that people always overlook, the possibility of special assessments. This is where something has been deferred, something major like a heating or air conditioning system, a roof, whatever, new fire codes, and all those costs get passed on to the existing tenants, and you don't have a choice in the matter. What about rent? Well, rent isn't cheap, and it never stops. And unless you're in a very stable building with a long-term lease, you always face the possibility of what they call a rent-eviction, where everybody gets kicked out, they do some renovations so that they can increase the rent. The emotional toll? Well, you just left your neighborhood, your community, maybe your garden, the home where you feel most comfortable. Now look, I'm not saying selling your home is always wrong. No way. But it's not always the right move either. The real difference between wanting to move somewhere and feeling like you have to is the big question here. What we're talking about are all the additional options if you don't want to move. So let's talk about the most overlooked option, a reverse mortgage. Now these mortgages have been gaining traction as of late. Thousands of Canadians are realizing that it's cheaper, not only cheaper to stay in your own home, but the physical and emotional value of staying in your home is worth something. There are positive impacts on your health and well-being and your life by staying where you're most comfortable. A reverse mortgage lets you do that. You can access up to 55% of the value of your home tax-free without selling, without making monthly payments unless you want to. And that's the other thing. People always think it's one or the other. They always think with a regular mortgage you're making payments, with a reverse mortgage you're not making payments. You can make payments. You can pay the interest every month. You can make principal payments like on a regular mortgage every year. It depends on the lender, how much. So let's say that again. You stay in your home, you don't make payments unless you want to, but you have that option. And you can use the money pretty much however you want, with the exception of going to the casino. It's still your house. Your name is still on title. The bank does not own your home. You do. So here's where I see it really working for people. People that want to stay put, where they love where they live, but they need more flexibility. Like Ron and Linda, real clients in their mid-60s, mortgage-free, house worth around $700,000, but they're living on fixed income. And what does that cover? CPP, OAS barely covers food. They considered selling, but once they tallied up the true costs and looked at what they'd be left with after buying another place, it really wasn't that appealing. They chose a reverse mortgage instead, took out a little bit more, took out $250,000, paid for some renovations, set aside an emergency fund, and gave a gift to their kids, who, by the way, were totally on board. And that brings us to something important. Reverse mortgages are misunderstood because people worry they're giving up their home, that their kids will be left with nothing, or that the bank will come knocking. Well, first of all, if you're the 1 in 3 Canadians that are retiring with a mortgage, you've got a mortgage. What's the difference? You make a payment where you have to make a payment, or you make a payment where it's up to you. Here's where Canadian reverse mortgages really shine. They come with something called the no negative equity guarantee. This is what is regulated by the government if you want to be able to call yourself a reverse mortgage company. That means when the house is eventually sold, you or your estate will never owe more than the house is worth, period. As an aside, there are other no payment mortgages out there, but in order to be able to call yourself a reverse mortgage company, you have to be regulated with respect to the no negative equity guarantee. As a fully licensed broker, it's not my job to find you a reverse mortgage. It's to shop around and find out what's the most suitable product for you. And if a reverse mortgage is, figure out which lender is offering the right product for you. They all have their own bells and whistles, their own upfront fees, their own penalties, their own prepayment privileges, their own terms. And the thing is, I'm paid by the lender just like if I'm arranging a mortgage with any other institutional lender. I am not allowed to charge you a fee to arrange a reverse mortgage for you. It's free, independent advice. Rather than calling a lender and you're only able to be offered their products by one of their employees who works for the lender, you've got someone in your court that works for you and that is out there trying to find the right product for you. Now, if for some reason you find yourself not qualifying for a reverse mortgage, and that's why you're watching this channel or this video, it might be based on your age or some other reason, then by all means reach out so we can walk you through what other options are out there. There are other no payment options out there in Canada. Many of them have very reasonable terms, and some people use them as a bridge. Some people use them as a bridge when they just don't qualify for a reverse mortgage today. Maybe one spouse isn't 55 and they need something to tie them over until they do qualify for a reverse mortgage. Let's find the right product for you. Let's find the right solution. So now when you pull money out of your home through a reverse mortgage or any other mortgage product, you are not taxed on that money. So if you were thinking about cashing in RSPs, think again. I mean, you're paying capital gains, you're losing the growth potential of those investments, maybe losing the income stream, but most importantly, you pretty much have to cash in twice as much as you need to get the money you want. So why even think that route if you can access money tax-free through another asset that you've built up for your retirement? People always get confused and think that RSPs are for retirement and your home is not for retirement. They're both retirement tools if you think of it that way. And in fact, the home equity in houses nowadays makes up a bigger portion than it used to in the past of people's nest egg. And so to think about not considering tapping into that when it can be your cheapest option is really short-sighted. So now to be clear, there are costs to get a reverse mortgage. Interest can accrue if you're not making payments. There's an appraisal. Well, that's fairly small in the grand scheme of things. Legal advice is required. But when isn't that a good idea? You're getting a second person explaining the terms to you just to make sure you understand. You're making sure that you are under no undue influence by anybody, whether from the salesperson or a family member, etc. It's always a great idea to have a lawyer walk you through the terms, make sure you understand. So getting a mortgage isn't free money, nothing is. But for a lot of folks, these costs are offset by the fact that these setup fees are actually very small, especially when compared to, say, a CMHC insured mortgage, where you're putting down less than 20% to purchase a home, and it comes with a hefty default insurance premium, which is for the benefit of the lender and not even for your benefit, and that gets tacked onto the cost of your mortgage. So for a small cost, you're buying peace of mind and the option of choosing when to decide to sell your home. Not because you feel like you have to. You're not selling at a bad market time. You're staying in the home until it's right for you. You've spent a whole lifetime fixing up and decorating and modifying this home to make it work for you. That might include living near friends or family or a garden you love to work in, and these are all factors that you know affect your physical and mental well-being and your longevity. Here's another overlooked feature of reverse mortgages. You don't have to take the full amount up front. People always tend to think in all or nothing. You know, regular mortgage, you're making payment. Reverse mortgage, you're not making payment. You can still make payments towards the interest. You can still make principal payments every year. But it's up to you. It's not mandatory. So you can set up a reverse mortgage, maybe take a little bit now, and leave the rest for emergency. Rather than trying to scramble to set this up when you're in crisis mode or when you're unable, like maybe you're in the hospital, thinking about setting it up now and you've got peace of mind. Or at least you know you've looked after your loved ones in case something happens. You can use it to delay taking CPP if you want to boost those payments later in life. So let's put it all side by side. Selling your home, yes, you get a lump sum, but you lose your home. You pay big fees. And now you have to find somewhere else to live that's going to give you stability, and you're going to be able to stay there for a long time. You may lose your community, your routine, your roots. You might even end up hating your neighbor. With a reverse mortgage, you stay in your home, you get access to your equity, and you don't make monthly payments, and your estate is protected. It all comes down to what matters most to you. If you're ready for a big change and you want to move somewhere like closer to family, or this house is just way too much, then you know what? Selling might be right. But if you love your home and you want to stay put, you just need to unlock some equity that you've built up over the years, well, it's time to rethink about how you see your equity. Treating your largest asset like a glass box that you're not allowed to touch, well, that just doesn't make any sense. Your home isn't just a place to live, it's a financial tool. And in retirement, all the tools should be considered in the toolbox. Give yourself some peace of mind. Still not unsure? Of course. Well, that's okay. My job, again, is not to sell you on any particular product. It's to give you information that you might need to make the best decision later. If you want information, by all means reach out. Let's talk about your needs. Please don't forget to hit subscribe if you found this video helpful, or share it with someone that you think might benefit from this video. If you want to see more in the future, then click on the bell, subscribe. You can find more information at rewindmortgage.ca or communicate with me by the method of your choice, privately, or you can simply leave a message in the comments and I will be sure to get back to you. Thank you very much for watching. Stay tuned for the next one, and we'll talk soon.